Thank you so much. Good afternoon, everyone, and a very warm welcome to our Q3FY18 earnings call. On the call today, I am joined by Mr. Naveen Juneja, Director and Group CFO, SGA, our Investor Relations Advisors. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has had a chance to look at it. I'm also happy to report that Talbros Automotive has reported its highest quarter in terms of revenue and margins. This Mr. Juneja will walk you through in the later part of the call. The Indian auto industry has witnessed a significant growth in the Q3. The Indian auto industry grew at 16% in Q3. However, our company Talbros grew at 28% for the quarter. We also are confident that whatever numbers we have given to you for the financial year will be achieved, as Q4 is also seeing a lot of demand from the auto sector. Furthermore, the vision statement that we've given to you over the course of next 2 years for the 2020 will be achieved. The performance of the auto sector was mainly on the back of good monsoons, improved rural sentiments, increased production of BS4 compliant vehicles. The above factors and the upcoming BS6 emission norms and safety norms will help sustain the growth in the coming years. Just to let you know, the Talbros division is already BS4 compliant and also ready with the BS6 products. Recently, SIAM has raised its final sales estimates for the current fiscal through March, expecting passenger cars to grow between 7 to 9%, commercial vehicles at 13%, two-wheelers at 12%. Industry reports suggest the business environment on commercial vehicles, two-wheelers, three-wheelers, and LCV has stabilized, which is in the favor of Talbros Group, where we got exposure to all these segments. We are very pleased with our performance for 9 months FY18, and we have almost achieved a bottom line in 9 months this year, which is comparable to the bottom line of the entire last year's financial performance. This itself speaks volumes of the initiatives taken to strengthen our profitability. Our business is broadly divided into our standalone business, gaskets and forgings, and our 3 joint ventures with global auto component leaders for gaskets with Nippon Leakless, for suspension and chassis with Magneti Marelli, and with Talbros Marubu for anti-vibration components and hoses. In our standalone gaskets business, we continue to hold 38% of the market share domestically. The sales in our most profitable segment, aftermarket, has witnessed sequential growth over the last 3 quarters. The GST has been reduced to 18% from the earlier 28% in November of this year, and we started witnessing the benefits from the same. Our focus on OE export business has helped us secure orders from Cummins, USA, Zeta Tractors, Czech Republic, and as well from a non-automotive conglomerate in Austria for our gaskets business. Our other business initiatives for cost savings, such as installation of post-coating line and localization of raw materials, are on track. The forging business continued to perform well. Our focus on the domestic OEM business has been playing out well in the last few months. We have also seen some interest from a few premium OEM customers and hope to close the deals in the coming months. In the forging business, we have increased the manufacturing and sale of mechanical components and heavy components. Further, we are also proactively working on upgrading technologies and looking at possible tie-ups with a few companies in Japan. Regarding our joint venture Magneti Marelli, we We have a 50-50 joint venture with Magneti Chassis Systems, a Fiat Group company based in Torino, Italy, with the scope to design and develop complete chassis for OEMs. We have recently secured an order from Maruti Suzuki to supply control arm assemblies for the front suspension with an estimated annual revenue of 24 crores per annum. We have also started supply for orders received from a large European car manufacturer for rear suspension. Our newest joint venture with Maruti Rubber Industries Japan, which caters to anti-vibration components and hoses. Our anti-vibration products continue to perform well. We have received increased business from SML Isuzu for molded hoses. We continue to enjoy in both the joint ventures the success of the Baleno and the Brezza and the S-Cross, where we are present both in Marelli as well as Talbros Maruti. We have also started supplying hoses to Japan Mitsubishi. Favorable macroeconomic conditions and the stabilization for GST, coupled with healthy order books, with a focus on localization, we are committed to achieve the numbers for this financial year ending. Also, as I mentioned earlier in the call, the demand in quarter 4 is looking very positive, and this will help us achieve our numbers. I now hand over the call to Mr. Naveen Juneja, who will update you on the operational and the financial performance for the quarter.
Thank you, Anuj. Now coming to our gasket division, including Nippon Leakless Talbros. For the quarter, our standalone gasket sales recorded a growth of about 22.37%, which was because of improved rural demand, festive season, and low vehicle financing rates. There has been an improved sales performance to commercial vehicle segment. Nippon Leakless witnessed a volume growth on account of sales to HMSI. The revenue from standalone gasket business was rupees 74 crores and NLK was at 10.9 crores during the quarter 3 of financial year 18. This segment saw a combined EBITDA of almost 12.3 crores. The revenue from standalone gasket business was at rupees 209.92 crores and NLK was 35.3 crores for the 9 months of FY18. This segment saw a consolidated EBITDA of almost 33.6 crores during this 9 months. Now coming to our forging division, there was a 54.3% growth in the revenues in the quarter 3 of FY18 on a YOY basis from rupees 18.9 crores in quarter 3 of FY17 to rupees 29.15 crores in quarter 3 of FY18. On a 9-month basis, the revenue grew by 45.42% from rupees 51.9 crores in 9 months of FY17 to 75.42 crores in 9 months of FY18. We have gained from lower fuel charges and execution of new orders. Coming to Magneti Talbros Chassis System Private Limited, MLT saw a 27.81% revenue growth this quarter because of higher volumes. Total portion of revenue to TACL in quarter 3 of FY18 was around 13.6 crores. On a 9-month basis, the revenue grew by 28.96% from rupees 29.5 crores in 9 months of financial year 17 to 38 crores in 9 months of FY18. Improved margins on account of improved volume achieved from the sale to Maruti Suzuki. Now coming to Talbros Rubber Private Limited, TMR saw a 41.16% revenue growth in Q3 of FY18 over Q3 of FY17. Total revenues share attributable to TACL was at rupees 5.2 crores. On 9 months basis, the revenue have grown by 18.33% from rupees 9.99 crores in 9 months of FY17 to 13.3 crores in 9 months of FY18. Now coming to the consolidated financial performance of the company for quarter 3 of FY18. Total income for the quarter as per Indian GAAP was 134.48 crores. However, the same as per Ind AS is 103.98 crores. The difference is on account of consolidation of share of revenue from JV, which is not being taken into account in Ind AS. EBITDA as per Indian GAAP was rupees 70.1 crore during this quarter with a margin of 12.71%. However, the same as per Ind AS is 13.09 crores, which does not include the share of JV. Adjusted PAT for the quarter was at 6.40 crore as per Indian GAAP, and as per Ind AS it is rupees 5.67 crores. The adjusted PAT margin improved from 4.9% in quarter 3 of FY17 to 5.45% in quarter 3 of FY18. Now coming for the 9 months of FY18. Total income for the 9 months of FY18 as per Indian GAAP was 377.45 crores. However, the same as per Ind AS is 287.02 crores. The difference is on account of consolidation of the share of revenues from the JV. EBITDA as per Indian GAAP was rupees 45.58 crores with a margin of 12.08%. However, the same as per Ind AS is 32.21 crores, which does not include the share of JVs. Adjusted PAT for 9 months of FY18 was rupees 15.58 crores as per Indian GAAP, and PAT was rupees 13.19 crores as per Ind AS. That's all from our side, and I would now like to open the floor to questions and answers.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Nitin Kapoor, individual investor. Please go ahead.
Hello?
Yeah, morning.
Hi, Mr. Taran. Congrats on a great set of numbers once again.
Thank you so much.
Welcome. During the last phone call, you had indicated that you're trying to reduce the working capital. So what's the situation in that?
Yeah, we are trying to reduce the working capital. Of course, we're not able to do it 100% because of the GST was increased to 28% in our gasket division.
Okay.
So the working capital went up, but however, for November of 17, government has reduced the GST rate to 18%.
Right.
20. Now it has resulted in the reduction of working capital, which will be, you can see at the end of March, the effect of the same.
Okay. And what are the future plans? Could we see more interest?
We also secured large contracts from BMW for our forging division, as well as Jaguar Land Rover for our magnetic division. So automatically working capital cycle goes up in the case of export orders. However, on 2 strategic initiatives that we have done in our company, one is the post-coating line, which is got established in the month of February, will help reduce imports, as well as our strategic disinvestment of our materials plant in Sona to Interface Materials USA, which will get live by June of next year, So you will automatically start seeing a saving from quarter one of next year on working capital. And we remain committed to the same.
Okay, great. And considering the new order that you've won, and that could add about 25 crores per annum to your revenues. So could our revenues increase now as you've won a new order in a couple of years?
This is for Magneti Marelli.
And BMW is from Forging.
Yeah, so Magneti Marelli is the order we mentioned in the call. That is from, I think, in the year 2019. So there we continue to dominate our share of business in the control arm assemblies of Maruti and Tata. So that will happen in 2019. However, BMW has already started, and there's a big surge in our forging business, which in this quarter only it showed a growth of 54%, because that 302 crores a month is already happening from the forging business. Also in Marelli, which has shown a growth of 28% for the quarter, the Jaguar Land Rover business, which is roughly about a crore and a half a month, has also been successfully implemented.
Okay, excellent. Great. And that's really good. That's great news for your investors. And are any new orders in pipeline? Something like you've won for Marelli? Any other?
Yeah, we are in the pipeline. Maruti from the new platform. Let's see how it moves. Whenever it's finalized, we'll come back to you. And on the forging division, we are already in talks with the major OEMs.
The very large tier ones in India.
Yeah. And whenever we are in the final stages of that, and whenever it's finalized, we'll come back to you. Definitely on that.
We've also secured and committed to you certain global OEM contracts for our gasket business from Cummins, as well as for Zeta Tractor in Czech Republic. So as we committed to earlier that we're going the OE way for global business, it's on track.
Okay. Thank you so much.
Thank you. The next question is from the line of Ankit Merchant from SMC Global. Please go ahead.
Hello, sir. Good afternoon. And thank you for taking my questions. So just a few questions on the domestic front. Sir, how is the order book which you are seeing, or are you seeing any improvement in the order book from domestic OEMs, specifically from CV manufacturers?
Like we mentioned to you in the beginning of the call, Cyan has already given its figures for this financial year ending, where the CVs are predicting at a 13% growth, two-wheelers at 12% growth, and passenger car at about 9% growth. And as you know, that Talbros being a very hedged auto component player is supplying to all these segments. CVs and two-wheelers from our gasket business, CVs from our forging business, two-wheelers from our Nippon Nucleus, pretty much 90%, and passenger cars from Marugu and Magneti Marelli.
However, coming to your question of demand from CV, of course, there is a surge in demand from CV. In this quarter.
Sure. And sir, can you give us some insights about your order from Cummins USA, and when is the production likely to start from?
This is the first order that we received from Cummins USA. It is not still under validation. It's not a very large order, but it's a beginning. It's about 4 crores, and it should start in the year by September quarter of this financial year. Although not to forget, our domestic business Cummins is over 42 crores.
And we are still in the process of finalizing some new order from Cummins. This is a beginning just.
Sure. We are in the pipeline of 2 or 3 more orders coming in from Cummins USA.
Sure. And can you also give us some product-wise margin, some light on the product-wise margin? Because I could see that your margins have improved, and they've improved substantially as well. So, which product segment has been doing really well for you, or, what led to the margins improvement?
Just a moment.
Our gasket business in quarter one, our margins went up to 13.31%. Quarter three, went up to 13.31% for quarter 3, up from 12.7% the last year's quarter. This is again because the top line has grown substantially from 60 crores last year to about 74 crores this year. In our forging business, the margins have gone up from 9.5% last quarter of last year to 11.7% this year. This is on account of our product mix going 55 towards exports, 45 towards domestic. Regarding the joint venture companies, Nippon Nucleus continues to dominate at about 19% at EBITDA margins. In Magneti Marelli, on better capacity utilization as well as export orders on JLR have jumped up to 7% for the quarter at EBITDA versus 5.6% in last year, same quarter. Talbros Marugu has also shot up to 7.89% for the EBITDA versus 2% of the last quarter. This is again due to better capacity utilization as well as our order books increasing in the hose division by orders from Maruti Suzuki as well as Japan. So that is why you see a 12.7% EBITDA for quarter 3 on a consolidated basis.
Sure. So that was very helpful. And sir, are you seeing any input cost pressure, considering that most of the commodity prices have now gone up? So
of course, there is little pressure on our raw material cost. However, in the aftermarket, we have increased our selling price by 4% from January, and we are going to all OEMs to get the price increase on the metal, and we are hopeful to get the same very shortly.
As you know, rubber is a shortage worldwide. So rubber prices shot up. Steel has shot up, but we are hopeful that we'll recover some of the prices in the aftermarket. May not that easily with the OEMs, but we'll manage.
Then we'll get them on the OEMs.
From next financial year.
Sure, sir. Sure. Yeah, that's it from my side. If I'll have any questions, I'll come back in the queue. Thanks.
Thank you. The next question is from the line of Avanish Chandra from Centrum Broking. Please go ahead.
Good morning, sir. Congratulations on a great set of performance once again.
Good morning.
Sir, you have hit a very strong margin profile. So, and you have talked about one post-coating line also. So, has that started contributing to the margin profile?
Not really. It has just been it's under a finishing stage in the month of I think within next week, 10 days, it will start.
The line has been installed. Our first orders to Tata Motors have already commenced. So you will see...
revenue will come from next financial year.
Okay, sir. And sir, you have talked about working capital advantage due to post-coating technology. Apart from that, what kind of benefit one can have? If you can elaborate in terms of numbers, how much it can contribute to expansion in margin from here onward?
Like we mentioned to you, it's a new technology. It will take time for the Indian OEM to adopt this technology. Instead of importing rubber-coated steel from Germany or from Europe, we will use Indian steel and we will coat the rubber on it where required to seal the engine. So this is a new concept. We've just won the first order from Tata Motors. It is too early for us to tell you right now that what will be the savings, but on a project basis, we can save about 15 to 20% to the OEM and to ourselves as well. And also not to mention that there's a major reduction in working capital because you reduce your imports and use local materials and foreign currency as well.
Okay, got the point. And sir, one more thing on the margin front. You have mentioned reduced power cost within the forging segment. So did we get, it is related to technical thing or did we got some cut from...
Technical thing, previously we were using HFO power, now we are using grid power, and we are already started the process of solar power, which should be available to us from the next financial year. So as per the percentage, which used to be 18-19% of the top line power cost, it has come down to 10%.
Okay, so these advantage will be there in the coming years as well.
Yeah, definitely.
Okay.
And another 0.5%, it should come down by 0.5 to 0.1%.
Okay. And sir, you talked about fully asbestos-free manufacturing facility to provide opportunity for export. So what are the export market we are targeting? Exactly which global OEMs we are targeting for this asbestos-free gaskets?
As you are aware, we have mentioned earlier also that we are approaching all OEMs for the export. We are talking to Cummins in a big way. We have been approved by Cummins for the global outsourcing. We are talking to Iran Mega Motors in a big way. We are talking to a European non-automotive player in a big way. Already we are supplying to Volvo and Ducati. And we are talking to Polaris of US in a big way for the export. These are some names I can mention to you.
Okay.
car also.
And sir, one last question, sir. You have mentioned heat seal contribution to raise. So, at what level we are today, and what kind of expectation we are having from the heat seal contribution, especially after BS6 norms?
So we are still in the process of developing this product for the car market. However, as you know, we're already supplying heat shields to the commercial vehicles like Volvo and Daimler at about 4 to 5 crores per annum. And we are still attempting to make inroads with the Hyundai and the Marutis of the world. However, the good news is that we received a lot of RFQs from global players for heat shields, whether it's Cummins or whether it's Polaris, and we're working in that direction at the moment.
Okay, Juneja sir. Yeah. Okay, sir. Thank you very much for this opportunity. All the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Sunil Kothari from Unique Investments. Please go ahead.
Yeah, thank you very much, sir. Congratulations for good numbers.
Thank you.
Sir, this lower profit from associates, which is 1.6 crore in this quarter compared to 2.2 in Q2. Any specific reason? Because as Mr. Talwar was mentioning, all the JVs are at a higher margin now. So why it is lower?
Because although I'm telling you, our sales of the JV is lower in this quarter because of the dependency on Maruti, Hero, and Honda. All these companies' plants were closed for 10 days in the month of December.
Okay.
Hero was closed for 10 days for New Year and Christmas and plus annual maintenance. Maruti was closed for 10 days. Honda was closed for 10 days. Cummins was closed for 10 days. So with the result, these companies had made the sale, but the production was less during this period. That is the only reason.
Right. And sir, this Nippon has a very good customer like Hero, HMSI, Maruti. And we are on a run rate of around 11 crore, 12 crore per quarter. Do you see any scope to grow higher in this Nippon Necklace gasket division?
Sir, Nippon Necklace scope of JV is only for Japanese transplant.
Right.
Okay, he is working only for Hero. He will work only for Honda and Yamaha.
Right. Maruti also seems to be our customer?
No, Maruti is customer, but now they are not concentrating on Maruti because Maruti gives us no margin. So TSA is working towards Maruti.
Okay. So Yamaha, Hero, and HMSI is a major customer, and they are. But sir, these customers are also growing well. I mean, if you look at their numbers.
What is happening is, in Hero Motocorp has grown very well, as well as Honda. But in the case of Hero, we had to give certain cost down to Hero, which is basically impacted the turnover from the Hero side to maintain the status quo in terms of market share. And we are right now working with our local material suppliers to reduce dependence on imported content for Nippon Necklace Talbros. So Hero, as you know or may not know, Hero has gone on a drive to cut costs across the board, not only us, every person, whether it is Omax Auto, whether it is Talbros. Hero is on this drive to cut costs because his sales were status quo for some time, now they've gone up, and he wants to increase margins. That is the main reason also.
So we will not prefer to cut the cost or cut the price and increase our market. It will remain a small player with Hero.
Sorry? No, because they are not big or small. We are not small players.
Right.
I think my joint venture supply up to 60 crores to Hero. Okay. And there are competitors also who are trying to spoil the rate also, but they just give an offer for a cheaper rate without realizing that it can affect other person. But don't worry, we are under control is there. We are developing some cheaper raw material also. It will stay. That is, margin will not come down. Don't worry about that.
Okay. And sir, gasket aftermarket is also not growing that well. I mean, quarter on quarter it has grown, but after this GST lowering, how you see those segment going ahead?
Yeah, you are right. Because when the GST was launched, the rate was 28%. Okay.
Right.
Orbit was in July, the rate was GST rate was 28% was gasket. But with the statement coming of the finance minister, we are looking into the rates, etc. There was not much pickup from the distributors. From November 18th, I think they announced the reduction the rate to 18%. Now the things have turned around, and I think we are back on track now.
So you feel, sir, any major growth in aftermarket gasket sale?
Next year, we are looking at growth of 20% minimum.
20% minimum.
Yes, in the aftermarket.
Great. And sir, last question. Broadly, looking at the opportunity auto segment is providing, say, many new products, new components are now added to this latest cars or vehicles, any commercial vehicle, so like many more electronics products, some sensors, some pollution removal or lowering pollution equipment. Are we thinking or for another phase of growth, any new products, new JV, etc.? Any futuristic just indication about growth segment?
We are looking at a few areas. One is that in our gasket business only, we're looking to go a little bit modernize in gasket. We're adding some electricals. I can't divulge much right now, but working with a global giant on the same. We are working with our forging business to get a TA from a Japanese company. I know it is taking some time, but that will help in lightweighting and more precision machining. We have also started engaging with Maruti on the future supply chain, that how we can be a part of the future supply chain. So that is already happening on the sidelines.
Okay. Thank you very much, sir. Wish you good luck. Thank you.
Thank you.
Thank you. The next question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Hello.
Hello.
Yeah. Hi, sir. So, congrats on the good numbers. So, on your Cummins US order, you talked about you have received an order of 4 crore rupees, right?
Yeah, from Cummins.
Yeah, Cummins US, yeah. So, is it a one-time order or it's an annual order that you have?
It's an annual order.
Okay.
And this is only the first order we've received, and many more to come, hopefully, in the future. The only thing with gaskets is that the lead time to test the product is long, but we are on the right course, and this will be 4 crores per annum. Obviously, it will start by September of next year, and there is much more in the pipeline.
All right. And sir, for Zito tractors, what would be the order size you have received?
Zito tractor is 1 crore.
Very small order, but it's a start.
Okay. And that again?
Anything new, he will give us initial order, small order, to test it. How to deliver, what is our quality, then they open up.
Right. And so for this Maruti supply for the MMT JV, we have received the supply to control arm assemblies for suspension. So this is for a new product or, or one of the existing products?
It's a new car.
A new this thing, right?
Yes, a new segment, new platform.
Okay. And that would start, sir, when did you say that will start?
August 2019.
August 2019.
Yeah. But at the same time, we have right now working MMT in a big way with Jaguar Land Rover. So let's see, hopefully more things to come.
Okay, all right. And sir, this in the Talbros Maruga rubber, that's a TMR JV. When did we start supplying these hoses to? Did we start supplying hoses to this Maruga rubber Japan, or is it going to start?
Yes, we started.
And when did we start the same?
It's been about quarter 3.
Yeah, quarter
3 was the main commencement.
Quarter 4 will be there, and next year will be, I think export will be around 9 to 10 crores next year.
On a turnover of about 55 crores next year.
Okay. And so, given the kind of growth that we are expecting, mainly in your gasket standalone business, the MMT JV and the forging business, how do our capacity stand? I mean, what sort of capex requirement would be for us, going ahead?
Capex for of course existingly for now we are all the businesses except let's talk about business.
Right.
In the gasket division, we are up to 80% plus now. We are now in the phase of expanding our capacity to approximately 28 to 30 crores per month. For that, we are in the process of finalizing our expansion plan. which will be finalized by the month of March. Maybe we require 10 to 12 crore for that. In the forging business, we have just put up a facility press of 700 tons last month. The 1,000-ton press will be operational this month. After that, my capacity will be around 12 crore per month by putting additional machining lines, 4 or 5 machining lines. It will be around 12 crore per month. That, I think, next year we are looking at a turnover around 130, 140. We are looking some growth of another 25-30% growth. For that, we may be requiring small investment of maybe 4 to 5 crores. And coming back to, this is my standalone thing. Now, my nipple leafless. Nipple leafless has a spare capacity lying in Uttarakhand. Now, with the GST coming in, everything is, we can manufacture anywhere. So, they will expand there in the Uttarakhand. There's not major capex there, maybe 1 or 2 crore piece.
Okay.
In my negatively, yes, we are looking for the capex for Jaguar and for the Maruti. We are expecting capex of 8 to 9 crores. We are now taking a small facility to cater the requirement of Maruti for the new platform. We are taking a small facility in Manesar on rent, and we are putting up some robotic welding machines there. The capex of our total presses and robotic will be around 8 to 9 crores.
Okay.
That will take care of 150 crores. It will take care of the mainly. And Maruti, we have a capacity of up to 20 crores in hose business, so no capex there. But in anti-vibration, we require 2-3 crores next year. That is the total overall scenario.
Okay. And the numbers that you have mentioned for your JVs, is your share of this thing or the overall capex?
No, 100% share of 100% JV.
Okay, 100% JV this thing. Okay. And sir, and these two supplies to JLR and BMW, we also started. So did this start, we had a full quarter, third quarter of supplies, or did we start somewhere in mid-third quarter?
JLR, no. JLR is just tip of iceberg, only 40-50 lakhs, that's all. But BMW full.
Okay, BMW we had full.
Is the normal supply of 2 crore per month.
Okay, so we'll see the full impact of JLR supplies happening in fourth quarter.
Yes, quarter 4 and next financial year, it will be 100%.
Yeah, so we'll have full year. All right. Okay, sir, thank you so much. That's it from us. Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Shikha Mehta from Equity Capital. Please go ahead.
Hello, sir. I was just wondering if you could throw some light on the other income.
Other income is basically operational income. Some is scrap sale, and one is the exchange gain or losses. Exchange gain is there, and export incentive. These are other income.
Okay, and so if I remove the other income in this quarter, then your EBITDA margins look close to 10.8 to 11%.
You can't remove the income. Other income is part of operational.
All right, sir. And so what?
Recurring operational income.
All right, sir. And what EBITDA level are we looking at for FY18?
Next year, we are given a statement that we are looking at a 0.5% to 0.75% increase in EBITDA margin going forward.
Okay, sir. So, at an absolute level, what numbers would we be looking at?
Financial year, we have given our vision statement already. You can see from that 2020 what we are looking for.
We have given you a vision statement that by 2020 will be between 675 to 725 crores. And I think we are line with that.
All right,
we
sir.
do the that also and keep.
All right. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ankit Merchant from SMC Global. Please go ahead.
Yeah. Thank you. Just a follow-up question, sir. What is the utilization levels right now for gasket and for forging?
I was giving you just in the last call for Kotak, I gave that because gasket is 80% plus running. Forging is running same at 85-90% level.
Sure.
And MFT also 80% plus. And my nipple leakness is about 70%. my Talbros Margo in anti-vibration 80-85% and 30% around in my hose division.
Sure.
That is
with the current order book in your hand, so what is the capex which you are planning for?
Yeah, we are looking for a capex of 10-12 crores in gasket, 5-6 crores in forging, 8-9 crores in MMT, and LTL 2-3 crores, and in Marvo 2-3 crores for next year.
Okay. And sir, any plans to increase your stake in your joint ventures?
No plan.
Okay. Thank you.
We will not reverse.
Sure. Okay. Thank you.
Okay.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. Participants, to ask a question, you may press star and 1. As there are no further questions, I now hand the conference over to Mr. Anuj Talwar for closing comments.
Thank you all for being on the call today with us. We are committed to our numbers for this financial year and also for our vision statement. The demand in the auto sector is robust and we should be in line with what we've committed to you as said earlier. Thank you so much.
Thank you so much, sir.